Yeah, the session, a negative one. We're not really used to seeing much red.
No, we're not used to seeing much red. In fact, we were off to a pretty good start this morning. We saw Wall Street with another record, with the Dow Jones Industrial reaching an all-time record high overnight. Financials and material stocks really leading the gains there. And the Australian market also reaching multi-year highs very early on in the session. This is the intraday graph for the Australian share market. You can see that we reached our highs very early on during the session in the first hour of trade, and then it was pretty much all downhill from then. In the end, down by 0.2%, we saw $4.6 billion worth of stock being traded. And I think there were a couple of things that we were watching around the region. First of all, the Bank of Japan policy meeting, where we saw no change in terms of its policy. And if we have a look at what the reaction had been to that decision, we did see the Japanese yen strengthening and the Japanese stock market giving back some of its gains. Also, in addition, we saw the Shanghai Composite down by 0.4%. So a little bit of weakness around the region as well. Having said that, one bright spot on our market was the gold sector. It had a fantastic performance, and this is an area which has underperformed quite a bit over the last 3 months. In fact, since we saw the 200-day moving average being broken on the downside by GOLD, which is the ETF fund, and that was in mid-December, we've seen gold prices down by 5%, but the gold sector down by 14%. Today, we saw a big jump back up. We saw Oceania Gold up by 5%. Perseus was up by 4.7%. So good to see a bit of a fight back from those gold companies. We also saw a number of companies going ex-dividend, and it is dividend season at the moment. We saw IOOF, we saw Leighton's, we saw Northern Star, Oil Search, as well as Panos, and it was good to see both Northern Star as well as Oil Search finishing the day higher despite going ex-dividend. So all in all, I guess a bit of consolidation after what's been an extremely strong run for the Aussie share market. The last 15 weeks, we've seen 13 weeks of gains.
On the gold stocks, Julia, what do you put it down to? Why the resurgence?
We've seen 3 consecutive sessions of gains for gold now. We're still under that 1600 US an ounce mark. The technicals are still looking shaky, but gold does look like it's trying to make a comeback. Fundamentally, I guess what traders are watching is potentially more stimulus. I guess the Bank of Japan disappointed today, but there had been some chatter in the market that we could have seen some easing brought forward. We didn't see that come through, so unfortunately that would be a negative for gold tonight. But of course, the other central bank meeting that we're watching very closely is the European Central Bank meeting tonight. Now, we did see fourth quarter revised GDP numbers still showing a contraction of 0.6%. The expectation is that the benchmark rate will stay unchanged at 0.7%. But the European Central Bank is expected to lay a foundation for further easing and for further cuts, and that could be a positive for gold prices there. So watching that ECB meeting tonight, and I guess the market's watching to see whether Mario Draghi lays the foundation for more easing out of the Eurozone. So we'll be watching gold as well as currencies closely.
It would have to be a pretty substantial amount of easing, would it? I mean, it would be hard-pressed to outdo what we've seen and what we've seen for an extended period of time from the Fed, and yet gold's kind of been in a little bit of a slumber, except for, as you say, the last few sessions. You
have to remember that the European Central Bank has had, I guess, more of a focus on austerity, and the Eurozone certainly has had more of a focus on austerity. So to get more easing, and I guess more of a stimulus tone would be a positive for risk assets. And so we're watching that shift very closely. Of course, the political situation in Europe is far from certain at the moment as well. So watching that Italian situation, I think we also see a German bond auction as well as an Italian bond auction tonight. So we'll be watching that. So lots of things going on in the Eurozone, but overall the Eurozone has had this bias towards austerity rather than stimulus, and it does look like that's now starting to shift.